Well, good afternoon, everybody. Happy tax day, and welcome to the April 18th, 2023 edition of Bull Sessions. My name is Mark Robertson. I'm joined here by my colleagues, Ken Cavola and Matt Spielman, as we continue our discussions about the two books, Annie Duke's book on winning and Joel Tillinghast's book on how to run a mutual fund, literally how to invest for multiple decades and lessons learned. And as we were just observing, there's been a whole lot of action at the table, and Ken's getting a lot of help with his hand there, and turkeys are involved. Welcome back, guys. Let's go ahead and get underway with part two. I still have both of you, right?
I'm still here, Mark.
Okay. Yeah. I'm just a little bit nervous about the equipment. I'm afraid to touch things, even though I didn't change any settings. Here's our standard disclaimer.
We'll start with.
No investment recommendation is intended. You guys all know this. This is all about a demonstration. It's supposed to be educational. It is literally to demonstrate and illustrate the methods, techniques, philosophies of the modern investment club movement. You'll hear opinions from us. Please, please, please do your own homework before making any decisions. If we own something we're talking about, we will try to remember to disclose that. Our roundtable is a week away. We should have a great roundtable 7 days from now with partnering with the St. Louis chapter and putting on what is becoming an annual event with the arch in the background. In this case, it's going to be Stan Musial in the background as we talk about that. Again, that's our monthly webcast, generally on the last Tuesday of every month, 8:30 Eastern Time. It is a special start time next week to accommodate that learning topic beforehand. You can attend either the learning session, educational session, the traditional monthly meeting, or both. That's up to you, and that is supported by that single registration that you can get. If you'd like to be added to a reminder list about the roundtables, ncavola1@comcast.net is the email that will achieve that. And if you have any other stuff, requests for slides or topics or etc., our two email addresses are there at the bottom. Any other thoughts, Ken?
No, if you're not quite up to speed on what we're doing next Tuesday with the times, you can drop an email to Natalie or to myself, and we have a standard explanation of what's going on, along with a repeat of the link. So if you're a little bit unsure of how the schedule's working, drop us a line, and we'll be glad to respond to you just as quickly as we read the email.
Good stuff. All right, just a couple of our traditional departmental things. Here's a look at the stock market long term. Those are quarterly bars going back to the turn of the century. Price bars based on the value line arithmetic average. If you're not familiar, that's the companies in the value line standard edition. Basically the average price. The red would be the average forecast from the companies in the book, and you can see they zig and zag. We know that stock prices zig and zag. And again, as we say every week, the big thing to keep in mind is that anytime the green bars are below that blue line, it's probably a buying opportunity of some sort. And we're certainly in a gentle mode of that right now, despite the fact that many of the people on TV seem to be talking a lot more about stock prices being overvalued these days. So we'll see who's right, but that's probably a temporary aberration. The quote on the right is, I think it's a good one that Matt has spent some time on, from Annie in her book, Thinking in Bets. And it literally is a reminder to do the best you can and recognize that there is luck involved anytime you do this kind of stuff. Humans are involved. And I just love the end of that, where I'm not sure actually can be quite a powerful and empowering position to take. Any thoughts, Ken or Matt?
Well, Mark, what struck me when I read this quote taken out after you pulled it out on the slide, and when I also read this quote in the book, is the fact that so many of the things we talk about in investing should probably end with those 4 words. I am not sure. There's so much of what we do based on reasonable conclusions, reasonable assumptions, but none of them are written in stone, and very little of what we do to project comes from facts that are known for the future. We project with facts that are known from the past a lot, but that doesn't make us certain about anything. I really, really like the statement that to stay in a good decision-making mode, you have to be aware of the fact that you can't be certain. And that's just restating what she's written there. I'm very fond of this particular quote.
And I think we were talking before too, Ken, gamblers work on very narrow margins to overcome the house advantage or to overcome their own problems. And so it's important to know not only that you're sure, but the whole point of being a bet is to sort of quantify how sure you are. But I also am interested in the history of espionage, of spy sort of history. And of course, that's come up with the recent lease that's come on. But I was coming across a conversation on a podcast and talks about in the intelligence community, which of course is very high stakes. They actually have guidance. When you use words like "this will probably happen" or "this might happen," they have guidance on numerically what probability you're referring to, so that they don't casually throw those out and have even two allies mean different things. That's actually codified, and it's wide ranges. I forget, it's like 30 to 50% and 60 to 80%, something like that. It's pretty wide ranges, but they actually very carefully watch the vocabulary, so even sort of qualitative statements about things aren't misconstrued. It was really interesting how detailed and how standard detail that is across a wide international body.
Well, not only is it true for something like spying, Matt, but when you move into advanced statistics, advanced probability is what you're really talking about. And it's quite common, no matter where you're dealing with the probabilities, to attach English values to the various probabilities to help make it more understandable. So the very kind of thing you're talking about might be used by a scientist when he's studying the efficacy of a certain drug versus a disease or a bacteria or a virus or something like this. So that's a very common thing to do, and we shouldn't shy away from it. But at the same time, I think we need to understand that the vocabulary is just that. It's vocabulary to make the numbers more understandable. And sometimes those numbers can be quite exotic when you're coming to a probability conclusion. I don't accuse any of the heavy-duty gamblers of doing that in their head, but I'm certain that all of those things can be broken down into numbers and probabilities assigned to whatever's going on. And I think that the better gamblers probably have a better instinct as to what those numbers are as they approach the end of the hand or the game or whatever closes down the bet for them.
Mm-hmm.
Cool. Well, Ken, since you mentioned drugs and efficacy, just a quick footnote. Those of you that are following Ardelyx, they did file their new drug application today. So they have relaunched phase 3 and phase 4, and Ardelyx is kind of in the news today. All right. How was that for a smooth segue, Ken, huh?
You didn't tell us what it was trading at, though, Mark, and how much you've made on it,
Well, yeah, we'll get to that at some future roundtable.
Okay.
Hey, all right. This is, again, we have spent a lot of time talking about it. It really just doesn't matter. Elections don't matter, but there are some cycles when it comes to economic cycles related to elections. And that's what's shown on the right, which should give all of us maybe a little extra nudge. Following the 2022 elections to perhaps look for better days ahead. And are we not experiencing some of that perhaps with the NASDAQ and some of those type of stocks already this year. And so they're up over 20% already this year. So good, clean fun. And that kind of goes hand in hand with the graph on the right. Literally, you hear the things about when blood is running in the streets and in the gutters, it's time to go shopping. We're kind of there. This is the Michigan Sentiment Index down near all-time lows towards the end of the year and the first part of this year. And that has proven statistically to be a pretty rewarding time to accumulate some stocks. So Ken, did you have CNBC up?
Well, it's given a lot of the talking heads pause, Mark, because in the last month the U of M survey came out and it had gone up and gone up pretty nicely, and it's given them pause to maybe indicate that they have in fact reached some kind of a bottom with the sympathy, the empathy, the sentiment, whatever you want to call it, that they're measuring right here. And I liked that the fact that it's bounced pretty nicely since that low is that low in December? Yeah, it is December low.
I think it was December, yeah.
59.7. Yeah, 59.7. So maybe we're on our way up, and that's not a bad thing at all.
Anything you want to add to that, Matt? Or are you good?
No, that's fine.
All right. Just a quick check-in on the groundhog contest. Again, our weekly check-in on it. Kim Butcher holds down the #1 individual position. Matt is chomping at her heels. And Orange County continues to maintain the lead in the group contest. It is nice to be on this page. It's been a while since I've been on this page. But some of our favorite investment clubs are right there. Look at all those Traverse City clubs sneaking up the list, Ken.
I know, that's where they usually spend a lot of time. So I'm just looking for Herb's name, and I don't see Herb here yet. So last time I checked, he was kind of sharing the basement with me. So maybe he's down around that area right at the moment. We'll have to see.
Now, I think you guys are on the ground floor, not the basement.
The ground floor, we've moved up a floor. Okay, great.
I've been to the basement. You're not in the basement.
All right.
And neither, by the way, is Kathy Wood. She's actually at 112th this year. She had held down last place for quite an extended period. And of course, the monkey is down at 152nd. So all is right with the world. Here's a quick check-in on our best small companies. We continue to lag the market by a little bit. Again, we're blaming the runaway values in some of those companies here over the last couple of months, the big ones, the ones that are in that, contributing mightily to that green bar. And Service First reported this morning or last night, and it wasn't real pretty. So we do want to talk about that a little bit. The outlook for Service First is not terribly unusual for what some of these smaller regional banks are going through. So we'll take a little bit of a closer look at it. And frankly, Ken, I was almost afraid to look at Metropolitan, the details, but I will after I perhaps have a couple of shots of something.
That's the first time that Metropolitan's moved to the very bottom of the list, hasn't it? It's even beating Semler now. Okay.
It's cranking way down there.
I think a really good indication, Mark, that there's something going on is the fact that at our investment club, where we don't usually have real strong negative words for a stock that we happen to think it has a good basis for progression forward when those kind of stocks tank. But we had quite a discussion about one of our bank stocks last night about whether to continue to hold it or sell it at a low or what we were going to do with it. We finally ended up buying a little bit more of it, but the discussion, it never turned nasty, but it certainly turned up a few notches in volume when we began talking about what do you do with these stocks that all the measurements tell you that things are going to be good going into the future, but your gut is just churning away because you've lost more than 50% on the investment to the point that you're discussing it.
So did you have to
Really,
did you have to leave the meeting and go outside and get some fresh air
no,
from
I tried to
Town?
stay as quiet as I could and listen to what people were saying, and
Well,
it's just this idea that a mob can still control, the an industry. They can control a company. They can control the entire market if they choose. And I still think we have an awful lot of people that are running around yelling and screaming about banks and have no idea, for the most part, how banks work or why
yeah.
they work the way they do.
Well, but
Have no idea that in an average year, we always have banks that fail. We just happen to get a lot of press on the banks that failed this year. That's all.
yeah, and Service First Bank Shares is a very, very respected bank. Matt and I were talking about it before you came online, Ken. This is the reality of what's actually seems to be happening. I think it's probably representative of some of these smaller banks. I think, these type of drops that you see here are quite the overreaction to what you see here. And if the analysts are right at all about what lies ahead, I mean, for example, Service First reported that they had a 23% increase in new accounts in the last quarter, which probably bodes well for the future. And the other thing that we notice right up top here is how strong they've been with respect to return on assets historically. This is a very respected bank. And like Matt and I were talking about, this one is getting hammered in an almost uh, incomprehensible way right now.
We should point out that the average for a normal, just a run of the mill bank in this country, on that graph you pointed to at the top of the list there, the average is down beneath 1. And this particular graph starts with a horizontal axis of 1.25. So this is a stellar bank for return on assets. And you're right, Mark. It's just being hammered, and it doesn't appear to be. There don't appear to be any specific reasons that people can state why it's being hammered, other than the fact that there's fear, and fear shouldn't be a motivator for you to move your money around. Uh, at least I believe it shouldn't be.
The only thing I saw that could be a weak metric is when you look at price to book value. And I just found this is the first quarter report that came out today, and it's good. And Service First is pretty small, so they haven't done a lot of acquisition. So its book value per share is $24.63 at the end of the first quarter, and its tangible book value is almost the same. It's $24.38. But at a time when a lot of regional banks are priced near, maybe slightly above or even below their book value, that may be, like you said, where people looking on the surface or who have latched onto one metric alone might be thinking they have something more than they do.
Yeah, and the other one, we didn't put any slides together, but I think we probably come back to it, if not next week, the week after. Schwab is just getting murdered. I was just looking at a graph. The amount of volume in Schwab over the last 6 or 8 weeks is massive compared to the long-term picture. Along with it, a fairly substantial price drop, and it seems like rumors are flying and all kinds of stuff. And I don't know. With my wife's IRA headed there by virtue of Ameritrade, I think I want to figure out what's going on at Schwab and maybe buy some more. I think they're going to be okay.
Well, it's not headed there. It's there, Mark. It's been at Schwab with a different name for over a year now.
Right.
So I have my IRAs, both of them, Natalie's and mine, at TD Ameritrade as well. But they've been part of the Schwab setup, even though the accounting part of it hasn't been fully integrated into a single unit. the company's been under Schwab's umbrella now for, well, it's been more than a year. So they did report today. They did report what an initial perusal appears to be a pretty strong quarter. We'll have to let the experts tear it apart, and I'd like to be able to sit down and read pieces of it and listen to parts of the earnings call. But initial reaction to the earnings report seems to be fairly positive, although the price has not moved in the same direction as the sentiment that has come out when the report came out.
Yeah, this is wild stuff. So I guess I'll just summarize and close up this one basically by saying, I look at this and I see a speed bump. I don't see a brick wall. And there's a big difference between a speed bump and a brick wall. And that's what we want to be thinking about. I think Schwab probably looks similar to this, but we'll take a look and explore it a little bit deeper. Like Ken said, after they shred it a little bit more and try to figure out what's going on there. All right, so with that, let's go ahead and continue our series. This is our second part of what will probably be 3 parts, led mostly by Matt, but again, celebrating this book by Annie Duke. And I'm just going to summarize and say I think it ended up in a pretty unexpected place for all of us reading it, and basically underscoring the concept of an investment club. And that's kind of what we're going to be talking about. And again, I actually went back and watched her victory on YouTube when she won in the World Series of Poker. I believe it was back in 2004. Clean fun. All right. And the other half of the combination here is Joel Tillinghast. Again, he's been at the Fidelity low-priced stock traditional mutual fund for a very long time. During that time frame, he's generated this type of performance premium. So he gets our attention here too. Here's his book in the table of contents.
On that last slide, Mark?
Yeah, go ahead. Go ahead, Matt.
I just want to say, so, there's a lot of things, and we talked a lot about Joel yesterday, and Annie clearly has sort of a direction that we're taking her messages. But if people want to put, one thought together from what we've talked about Joel so far, I just think it's remarkable that one of the best investors of his generation, right, that meets that 5% plus return, who was mentored by one of the best investors of the prior generation, which is Peter Lynch, with the resources of Fidelity and the freedom, because Fidelity is not a growth investing house. They invest all the ways. So he had the freedom to decide whatever approach he might want to take. And as far as I know, has no interaction with our community, ended up choosing and or developing something that is almost exactly the same, right? That arrives at the same point. It's more than coincidence. It's a very interesting endorsement to me. The other thing that why I wanted to stop on this slide is if you look on the left and it has the managers of there and you count that up, there's nothing he mentions about in terms of what Annie talks about in terms of he does talk about psychology of investing, but in terms of working together. But look at the 10 people who've worked with him on this, right? I mean, and I found this too as I was researching Victory Capital a couple years ago. It's quite common, no matter the size, when you have an investing group together, that would be a number that you could make a decent investment club out of. Right, so it doesn't matter the book you're running. When you get a group of people together, Joel is the headline person. He certainly has been from the beginning, but he has a number of names that he's working with to get that result too. So I think it actually endorses that as well.
Cool. All right, here is the book itself. Big Money Thinks Small, and of course we like the small stuff and the simple stuff, so that kind of shows up here. Next week, we will probably concentrate more on the mechanics and some of the methodology, how it compares to what we do. But again, that's out there, and it's quite a good book and a table of contents. Here is Annie's table of contents from Thinking in Bets, and a lot of what we covered today is going to revolve around this buddy system, this notion of leaning on friends and contemporaries for ways to make oneself better in whatever field of endeavor we're talking about, in this case, investing in investment clubs. Your thoughts, gentlemen?
Let's get into it.
Yep.
Go for it.
Mm-hmm.
All right, so we are borrowing quite a bit of this from a presentation that Matt is building, and will probably be up in lights fairly soon at the national convention or regional events. So thank you, Matt.
Mm-hmm. Test drive.
All right, just as a reminder, here's Annie's definition of, again, recognizing the difference between a method, a process, in our case, the investment analysis, the quality of decisions made on that, and the fact that there is some luck. And as Ken was just mentioning, the luck is a very broad category. When you have mob rule and kind of a mob sentiment when it comes to a category, and right now regional banks are in the firing line, that all comes to play there also. And again, the decision to buy a bank that has gone down 30% in value. I brought Service First to the roundtable last month, and I'm probably down 10%. Is it bad luck, or was it a good decision? Probably not as good as that presentation on Generac a year ago. And there's a perfect example of, boy, that one didn't work out very well, but I don't think it was my fault. Recognize the difference. All right. Go ahead and stoke us back up, Matt.
Sure. Well, and this is definitely, I did some thinking in regards to your feedback, Ken, when I talked about, and I talk about not that investing is gambling or the market is a casino, but that they are both games in the sense that there is an element of chance, in particular, there's an element of unknown information. You can never know as much about a company as the people who are in it, or certainly there are some approaching infinite number of people who know a lot more about it, but you can know enough. And so it so happens the Motley Fool Money podcast, actually 2 weekends ago, had exactly an episode about gambling versus investing. And so I wanted to give a little nuance to this. This is a graphic I made. I didn't pull a graphic from them, but it's based on an audio description. So don't pay attention. If you have beefs with the spacing of the different places on there, understand I just kind of sprinkled them evenly there. There's no implication of precision here. It's just a matter of a continuum. With the ultimate speculation being flipping a coin, in the sense if it's a fair coin, to use a true economist's example, all the way to their ultimate in investing, which is certainly appropriate for a large number of people, is index investing, in the sense that you're smoothing out or getting rid of variation to the maximum amount. So they have, again, flipping a coin, up to, and you throw in investing starts making an appearance with meme stocks. How emotional is that? How data driven is that versus momentum or perhaps opinion based? Poker, I think, is the point where gambling tops out in terms of having a strategy. We talked before this started about where blackjack might fit in, right? Which certainly has elements of skill, but really is you playing against the dealer's hand and against other players. In the world of options, there was some discussion in the podcast about where venture capital versus turnaround investing might be. They might be swapped out, but something there. And then they specifically mentioned, because they are the fool, buying a stock in a great business, which this is where I think we go into. And then they separated out two, and I think these are important too. The gambling is an all or nothing bet, right? You win or you lose. You don't go down 10% with the option to pull out or decide to double down. You get further decision points and some feedback before you're ultimately end that bet, and it's up to you to do it. And then something that, again, Joel was really adamant on speculation is that there's a defined expiration time, right? Investing is essentially perpetual. You only get out when you want to get out. And if you are betting, even in long terms, if you're betting something on the election outcome next year, on whether there's a recession this year, whether there's an interest rate raise at the next Fed meeting in May. All of those are sort of moving to the left on this spectrum, adding some amount of speculation into the mix of how you're participating in the market.
Matt, if I were an audience member right now, I might ask the question, where would you place cryptocurrency on this continuum?
Oh, good heavens. You know, maybe somewhere around options, maybe somewhere around meme stocks, depending on who gets into it. You know, it's interesting, you know, because even options themselves, they're based on something, but they're not really something themselves. Cryptocurrency doesn't have an expiration time, but of course it is dependent on that infrastructure, right? Are you, and particularly at this point in time when they're sort of shopping for banks other than Signature Bank, can you get your value out? Not just did the coin value go down, but can you actually smoothly withdraw what you go through there? So maybe somewhere between meme stocks and options. I don't know. I'm sure other people would put it far to the left of that.
I'm just trying to, I guess, make the point that with 3 investors on the panel today that have a lot of experience and are of an age when they might have been able to claim they've seen a number of things in the market, not just the last 4 or 5 years. I think that where people place things on the continuum might have a big variable attached to it. I'm just wondering if some of our friends in our own audience might place meme stocks a lot more to the right and might place crypto a lot more to the right. And I think that's just a function maybe of experience in whether you're an experienced investor or an experienced gambler. I don't frequent casinos. I've only been in a casino 3 times, and I would not know what to do once I got into a casino other than to play one of the slot machines. I don't know the jargon. I don't know the rules of the games, and it would be very difficult for me to participate in a poker table or a baccarat table or even a craps table. So I think that experience becomes part of what we're talking about in this whole continuum as well.
Part of the secret to that, is I discovered in a big way, is let your wife do the craps table, and they will help her. They will not help you. They will not help any of us, but they will help her. And they actually give pretty good help. Pretty lady.
But you're right, Ken. I would even expand it and say knowledge, because maybe you have a direct experience or maybe you've researched it. Certainly options has a whole language full of Greek letters of things that they consider important that you wouldn't at all know investing in quality growth businesses. So if you were to try and jump in there because you saw, on the basis of seeing a YouTube video or having a friend that gave you a recommendation, you know, you're in dangerous water. You probably just threw some money away. You know, likewise.
And Matt, I agree with you that knowledge, it includes knowledge of what your odds are of actually being successful in whatever the endeavor is too.
Yep. Yeah. You know, I had a number of friends that were mining Bitcoin for fun when it was $1 or $3 each. They had devoted their computers before to processing information for SETI, the search for extraterrestrial intelligence, and they heard this Bitcoin thing and thought that was a fun way to spend their computer's idle time anyway too. So I know a lot of foundational things around it, and that does form my opinion of whether it's all hocus pocus or there's something to it. But that certainly is different than speaking to a $50,000 Bitcoin.
Absolutely.
Yeah. And we're beating this subject to death, but I do think that there is an evolutionary thing happening with blockchain and that kind of stuff. And I think there is commercial value there. So yeah, it's evolving, and we'll just leave it at that for now. All right. Here was just a quick reminder that Matt offered up that when we talk more about Tillinghast and the methods and some of those comparisons, again, likely next week, there's just a whole lot of consistency and agreement that can be perceived. And my favorite is anytime you bring up Walter. And then you also bring up the fact that it is okay to still just shop like an average investor. I guess
And,
about you're
the
above
quote on the
average
right
investor.
is from 2018. And I made sure to say specifically he uses print copies.
Yeah. Good stuff. All right, let's go ahead and keep rolling along. Unless you got anything else you want to add, Ken.
No, I'll jump in when I need to, Mark.
Okay, and I left this one in there from last week just as a reminder and a tribute to Daniel Kahneman and the fact that both of the two books refer to this type of stuff. So again, Matt, I think it's important to realize, and this actually rhymes with Hugh McManus's presentation about chasing woolly mammoths and building fires and all that stuff from a few years ago.
Yep, less Kirk, more Spock. You could have put those two in there too.
Yeah. So good stuff. So again, both of the two authors recognize the psychological and behavioral finance aspects of what we're talking about here. So I'll just set the table a little bit. Again, I think investment clubs, at least from my personal experience, have been a powerful way to avoid some embarrassing moments over the years, and also the flip side, discover exciting opportunities. But this is straight out of Annie's book, where she talks about WKRP in Cincinnati and their special Thanksgiving celebration of dropping turkeys from a helicopter and with disastrous consequences. And again, an investment, one of the key aspects of an investment club is to challenge and fact check and all that kind of stuff that we're about to get into. But again,
And if you're thinking shrink wrapped balls of deceased turkey, these were live turkeys they were dropping.
and I wish I could say that no turkeys were harmed, but they were. Good stuff. And again, the quote is pretty powerful stuff from Annie, and that actually leads us into a discussion of, again, I find it fascinating that she had this powerful discovery that as an emerging beginning poker player, she would actually gather up opponents and friends and attempt to get better by discussing and exploring and all that kind of stuff. I think it's a perfect description of investment clubs and the stuff we try to do together. And she was quite surprised that an opponent, quote unquote, an opponent, air quotes, Ken, would actually help her to get better. And talks a lot about Phil Ivey and a few other people. And
yeah, I was just going to mention too, and she mentions a number of scenarios in there where she's learned, and Phil looms large, but it's not just I'll say the best, right? There are other people learning too. You can learn from mistakes as well as from positive advice. So she was very observant and was looking to engage, not just willing to engage, but looking to engage with players of all levels, as long as they were serious about the craft, as long as they had something she could learn from. It was not that it was just the top three.
any thoughts, Ken?
No, but I'm looking forward to the next couple of slides because I think they're powerful.
All right,
so
go ahead, Matt.
We lost some animations on here. Yeah, so Annie talks about, and at the beginning of this group of slides, we talked about that a bet is taking a belief and betting on the set of outcomes. And I apologize that the animations didn't come through. We kind of slipped this in the last point. But that's not linear, right? There's a feedback loop, which is on the bottom. So you bet and you get a set of outcomes, and as you have a career or go through your life, you want to apply what you learned. Ken talked about learning from our experience and bringing that in. And there are a lot of systems or metaphors for that kind of feedback loop. If you're in the automotive industry or any kind of scientific endeavor, you might know lean enterprises, calls it the plan, do, check, act cycle. Six Sigma out of GE calls it DMAIC. But it's essentially the scientific method, right? You have a hypothesis, you set up an experiment, you look at the results, and you go adjust your hypothesis and try it again. And then if you're correct, then you move on to the next one. The big thing here, and it's true of all social sciences, and it's true of any kind of life experience where you can't control all the variables, is where you have on the right, where you have an outcome, and part of that outcome is due to luck, or let's say due to circumstances beyond your control, to make it really general, and part of it is true to your skill. And you could very easily take incorrect conclusions, or conclusions that will get you in trouble, make your outcomes worse, if you mistake the two. So the first skill that Annie talks about is what she calls fielding these outcomes, and being able to properly sort out what was the luck and what was skill, right? If you had a royal flush and you made a bet, depending on what was going on, and you still ended up losing, is that a small chance item, or was that a wrong strategy? And that's the kind of thing that she would specifically look for other players to run through when they didn't have anything at stake, so they could be more or less more objective about it, and confirm what her decisions were, independent of the outcome. The next one. So we'll get to the point really talking about help, but I think we need to talk about, that you yourself are not helpless, right? We have these tendencies. Our system one whispers to us. 2 weeks ago, we had that exercise where you could feel what it was like to have system one whisper to you. There are things you can do to instill discipline in your thinking and be more objective, make fewer fielding errors. In general, it means basically engaging system two. When we looked at the attributes of system two, Annie calls it lazy. Actually, Daniel Kahneman calls it lazy too, in the sense that if there's nothing that we think needs our attention, we're perfectly fine sort of not paying attention. But we can use a number of tools to bring your attention regularly going on. So the first thing that's referred here is changing your habits, right? So we have a habit, and again, certainly you talk about habits in weight management, weight loss. Students talk about habits in studying. You have a habit in your investing. How do you make a buy or sell decision? One thing you might have in terms of a good habit is, do you consistently use an SSG, or if you have a certain decision checklist, do you use that all the time, or do you sometimes tend to go off by instinct or get caught up in the fact that there's a big move in a stock you had that day? Those things that make you stop and think are all helpful to not only drive habits, but also Annie talks about traveling in time, helping your future self by laying out the process and tools, and simply having to have the discipline to use your tools, as opposed to having to have the discipline and all the math in your head. Will help to remind yourself that there are high stakes here. It's easy to make mistakes, and you need to go through and whether you say check all the boxes or whatever it is, use your process and stick to your process that has been successful in the past. The other thing is, and this is part of more discussion about a self-serving bias. And we talked about a number of the biases last week as well. Annie focuses on a few of them. But the crux of the self-serving bias is, when I have an outcome, if I have a great outcome, then that was definitely my skill. I won't say Generac here. If I have a bad outcome, it was definitely luck, right? If it weren't for bad luck, I'd have no luck at all. The interesting part about that is we tend to do opposites to other people, right? If you're driving in rush hour and someone cuts you off, well, he's a nasty so-and-so, and why didn't they look and all that? Not that, they're driving a car with a known blind spot, or their child was distracting them, right? We don't tend to be forgiving. If we simply try to think about it in terms of this happening to someone else, that can also make us more objective. Even if, and this is, it can be very socially awkward. If you simply talk out loud about your decision in the third person. So if I said, will Matt Spielman buy some more Western Alliance after earnings today? That much of a small trick can actually, bring you a little closer to more System 2, less System 1. There are a raft of other things you can do, but understand that that's kind of how we're trying to untrick ourselves or retrick ourselves into thinking slowly. Next page.
Sure.
Okay. But in the end, you know, those items have their limitations, right? One of the hardest things you can have is to see your own blind spots. And one of the easiest ways to point them out is to ask someone about them. Now, you need to ask certain people about them, let's say it that way, and you need to have, most importantly, a certain type of social contract, a certain type of expectations of what the conversation will be to have it be productive, right? If you just go up to the grocery store, man on the street question, and say, should I buy Western Alliance today? You know, they're going to look at you funny and might not even know what you're talking about, or they may be somehow put off by even the way you approach them. Because it's not how they're used to being approached, and just disengage with you. So again, this is a significant section of the book, but she talks about some very basic points of what she calls a decision pod. What I would assert for us is an investment club. So again, minimum on a decision pod is 3, 2 to disagree, right? To have that discussion, and someone to be impartial and referee the 2 discussing. In an investment club, that probably puts too much work on the 3 people, but you know, you get the idea.
Well, Ken, I think we need to invite Matt to ride in the back seat the next time we go on one of our road trips. And 2 of us are disagreeing in the front seat.
2 to disagree and 1 to spot Bucky's.
No, I think this is powerful stuff. And I mean, before we even came on, Ken was talking about attending an investment club meeting where the debate was actually ratcheted up a notch at this month's meeting. And that's such a powerful thing. And it can be a real corrective course. And again, habit forming type stuff. So again, I'm pleased to hear that there was at least the shadow of disagreement last night, Ken.
Well, it's that same debate, Mark, had arisen a month ago. The same question had come before the group to put more money into the bank that we had lost money in. It was down in the high 20s trading at that point, and the motion went down resoundingly. There was nobody that was feeling confident enough to trade when there was blood in the streets. Now in the low 30s, the club has decided to put a little bit of money, but considering how large their portfolio is and considering how much money they put into the bank, it still was a very small step towards reasonableness. It didn't guarantee that it was going to be successful, but it was certainly, I think, after all the debate, a reasonable thing for people to do.
Yeah, and I think there's a key point there, and Matt's probably going to expand upon it, though. Being open-minded with those who disagree. Again, it comes back to that I'm not sure moment. And you can actually engage in that type of open-mindedness if you're willing to admit that type of stuff. And I have a hard time with this one because I'm right such a high percentage of the time, Ken. So.
Theoretical.
I know.
Theoretically.
I know.
Yeah, this is
it's a large burden to bear. Okay.
It is. Somebody's got to do it.
But I do hope to take this eventually into our language specifically. I mean, this is still rattling around in my mind quite a bit, and that's why I'm looking to test drive this too. But you know, your guys' conversation, you know, I know you guys get it and see the potential, right? So we do need to, first of all, agree to seek the truth, to have it be a safe space, right? We can disagree, we can even have a heated discussion on one element, and the next time we meet, we're on to the next topic, right? We don't hold a grudge that someone's roundtable selection won the voting last time, something like that.
Well,
I'd say.
I'm sorry. Go on. Finish your point, Matt. Go on.
I would also say in that second bullet point, right? And I think this is a great endorsement again of an idea, but the idea that you need to take breaks sometimes, whether that's a break in a long agenda, but I would say this is an endorsement, let's say, of social meetings once in a while. A lot of clubs may have a Christmas party. They may have a summer get together, right? They know each other beyond just for the club's boundaries, and so that's not the relationship that's at stake when we disagree. I think that's a great ringing endorsement of sort of those other things that might be seen as soft or just social.
I think it's important, Matt, also to understand, for our audience at least, that a few good people does not necessarily make an effective decision pod either. I visit clubs on a pretty regular basis, and I find many clubs that are of a very like mind. That's code for they seem to follow one or two people in the group and don't disagree with them very much at all, and those one or two people seem to make most of the decisions move in the club. I thought it was a sign of strength that this particular club was willing to bring the same topic back to the next meeting and debate it as if it were a new topic, not refer to it from, well, last meeting we ... whatever, but we're able to come up with a good set of reasons pro and con why they wanted to do things. It's a larger group, it's 22 people, but at the same time, that 22 wouldn't even necessarily be a decision pod if they would have chosen to avoid ever talking about this question again, because the vote was so decisive the first time to not do it. I don't know if I talked in circles there, but I hope I made the point that you need people that are willing to take the other side of the debate, whatever it happens to be.
Yeah, and we've talked several weeks ago, even as a potential indicator of that, and I certainly agree. If that's why the second major bullet is share the hard work, right? So the idea that everyone has to be in on this, it's a social contract. It's not a simply a lecture, a teaching venue. But as an indicator, how many of your votes to buy or sell are unanimous? And not saying that unanimous is bad. I mean, clearly there are some very strong points to go through there. But if you don't at least occasionally have certainly some disagreements or even some close votes, that might be a sign you're only finding strong cases. It might be a sign that you're not fully exploring the cases you have, particularly if you're not outperforming the market after those votes.
Good points, all of them. Mm-hmm.
All right. So seeking the truth can be 2 points, and I try very hard not to come up with political analogies here. But our reasoning can be one of two ways: confirmatory reasoning, which I do worry in some points is where I am in Joel Tillinghast. I'm so excited that I recognize a lot of what he talks about. Or exploratory reasoning, specifically trying to look at alternatives, putting your own initial judgments aside. It said maybe I should count up how many times I put open-minded on here. You can see how important it is, right? Yeah. So everyone will come in with an opinion. Of course, someone in the club has nominated this idea, maybe through an industry study, maybe just through a Pounce list. It's going to have a parent or a sponsor. But how can even that person or anyone else decide really on an objective basis what's going to go on when sorry, I lost my train of thought. But the other thing in terms of the people is also that this is an audience, and I have to say the number one example here is the roundtable itself, right? You have a very large audience. You are not making a recommendation, but you're putting out an idea. At the end, the views of the audience. Certainly, the audience are all investors as well. So their interest in the accuracy is that they may take the idea away, do their own research, of course, and then put money on it. We expect also as an informed audience that they're well informed. They know certainly the methods that we come to these conclusions on. We're all also watching this online so they can fact check as you're talking. And then the legitimate reason is, this is one of the reasons why I think it's more important to have an investment club. And I've had other groups that we've gotten together to talk investing, and it seems that it stays fairly shallow, and that's because there's no money on the line. Right? You go back, and Annie would say that's you're making a bet. If you're looking to buy or looking to sell a stock, you are making a bet. It's money, and money has the role it has in our society. That's a legitimate reason to be interested beyond just being curious. And even if the dollar values aren't a lot, it gets serious very quickly. Again, because you may go back, or there may be implications for your own personal portfolio, even as you're talking about the club portfolio.
Good stuff.
Okay, so we talked about the rules, right? How do you have truth-seeking rules? And again, I really want to take, and I have a few investment club charters, bylaws and such. I really would like to take these and kind of pick them apart or line them up, just to see if I have a complete list or a complete categorization of them. Right, so we definitely want to focus on overall accuracy, not simply confirmation. We want to make sure that and we say reward objectivity. We don't tip you $1, but the idea that discussion is good, discussion of two sides is good, that we don't need the piece that unanimity brings is a bad thing, or not necessarily the best thing. And having those discussions, but still being a group and being able to meet the next time and start fresh, or even to start better off, having had some very good, thorough discussions, because we all know that we're improving for that. Accountability. So we have stock watchers, and we expect them to follow the stocks as there's breaking news. I'm sure every stock watcher who had a regional bank, as their meetings come up now, and I'll say my own club, the Houston Miler Club, actually bought Western Alliance on Saturday, and I wasn't there. I was actually at a funeral, but it spaced a lot of my information. So we'll see. Tonight is the first test of that. But if I miss something, I miss something. Openness to a diversity of ideas. Last week, it kind of came to my mind that I wonder if there are any investment clubs out there that are actually recruiting. I love our club actually has a doctor on staff, and just like the roundtable looks to Hugh whenever medical terminology comes up, we look to her to tell us, well, is that BS or is that something good? All of that, and that shared experience goes through, you'll end up trusting each other more. I think that's the other thing too, not to meet too frequently and end up day trading. But as you build over time and you become comfortable with the styles that people bring, the strengths and weaknesses that people bring, I think that you can find a way to operate and build that trust that makes it easier to do this.
Interesting. Yeah, well, my wife and I were at a dinner Saturday night, a charity dinner. Fascinating experience for us. But the gentleman I was sitting next to, we were just, again, chatting about what we do and that sort of thing. And we got into a fairly deep discussion about investment clubs. And he happens to work at a branch, actually an operations center for Comerica. And I believe we just sitting there over dinner, I think we formed an investment club. And
Oops.
might be calling for some help on that one, Ken. But it was really fascinating, and it also brought to mind. Ken and I recently gave it was actually to a joint audience, but American Association plus a few better investing people also. But a lot of the American Association people kind of refuse or push back on investing in individual stocks. And Ken and I both received sheer evidence of an openness to a diversity of ideas, in that they are reconsidering their position and thinking through, how could I actually do this as an individual investor. So kind of neat stuff. Anything else?
Yeah, well, I'm glad we get to this one at least today. So this is, and I forget who brought this up. This is a model called, they call it Kudos.
Yeah, it's from Merton, economist Merton.
Yes. Yep. So this was his model for an operating environment for scientific discovery, and in essence, that's what we want, right? We want to be objective. We don't want to be if you have another sort of scientific or technical framework, I mentioned a few of them before too. These are all mental models that are fairly related, so you can definitely use them. I'll first say, and I capitalize it so it comes out, but communism is not all flying red flags. It's the idea that all information belongs to the group, no hoarding or holding back. So I'm sure a number of you have heard, whatever scientific claim, and then it can't be reproduced outside the lab that claimed it, right? Because they are more interested in the leverage of their discovery, or they're hiding something. So you want to be able to reproduce it. You want to fully disclose how you've come to the conclusions you've had. And then again, if that's not comfortable, it might be that you do have a blind spot that you're discovering there. It might be that there's a metric that you haven't had. Why does service first price at 2 times book, even though everything else looks good? Just to bring up some discomfort. Universalism, right? So uniformly apply your standards. You may have the most experienced person on the club and the least experienced person on the club doing stock studies, and they both should do SSGs, right? They both should look at the same things. One will be more polished than the other. One might choose, let's say, a spicier pick than another, and that's how their experience level comes out. But we still have similar expectations of the evidence they would present, let's say it that way, what they're striving for to bring ideas to the club. Disinterestedness, there's a common exhortation to say don't fall in love with your stocks or your companies. There are a number of things to do. I've been of two minds, for example, the idea that we should rotate stock watcher assignments, right, to move it on, because there is a part two, particularly if we're going to hold stocks for a very long time, where you know where to look after you've had the experience of a few quarterly reports. And so there's a cost there to pass that along, but I think that there's also some value there to keep us disinterested. And then organized skepticism, right? Someone should take a dissenting view, even if it's yourself. And there is other detail elsewhere about bringing on a dissenting view or alternative view to go on. For example, we all want to think of the future where our companies, our stocks do very well. Have you stopped at some point and specifically thought, well, this stock, or this company went bankrupt, or this company had a disappointing earnings? What would drive that? Probably. And simply imagining what could go wrong with your stock may drive you subconsciously, if you're knowledgeable enough to look at things for further study. So for example, will they have a new product that's launching? Maybe that's an area of focus. Or maybe they have a new challenger in Europe, or there's some European regulation they might leave the market. Imagining those end states and working your way back to the current state may bring you some ideas of where to look if it's not obvious at first.
Good stuff there. And I see that organized skepticism. That's a perfect description of riding in the car with Ken. He certainly challenges, and his way of extracting information from me is exactly that. He will definitely use the Socratic method to do that. The other thing that I was going to mention, you talk about threats, and we, a couple of years ago we talked about life after Google, and within the last couple of weeks there's been a pronounced increase in the amount of concern over AI and Chat GPT actually being a existential threat to Google. I just think that's an interesting.
On top of that, simply this week, the possibility that Samsung may switch to Microsoft Bing for its default browser.
Saw that. Yep.
That's $50 billion in market cap off, which I'm sure is more than what they're paying for the privilege. But yeah, that's the thing. We marvel at the positives that Google can be a small company by manifest terms, that it grows 20% a year. But I do think that that's a double-sided sword, that there are downsides to that, which is the easy introduction of alternatives. You just have to wait for the better alternative to come.
Yep. All right, I think we can close with these last two slides, Matt, if you want to take
Yeah,
this
I
one.
talked about, I didn't name Ulysses contracts, but that's the psychological idea of looking, if you remember the story of Ulysses, having himself lashed to the mast of the ship so that he could hear the sirens but not be lured by them. You know, the idea that you can do things in particular, not in the moment or at the point of decision making, but by having a process and being methodical ahead of the moment to help yourself when you most need it. Then the other on the top, it's another kind of more neurological point. When you're imagining the future, you actually activate the same areas of your brain that you have when you remember. So if you think that seeing the future is a difficult point, or why is it difficult, Steve Jobs called it to see around the corner, it's because we actually, in a very literal sense, remember the future. We piece it together from things we know. And that's exactly why thinking about the future may bring up things that maybe subconsciously you're not sure about. Either they're blind spots or you have doubts yourself, but you haven't been honest with yourself about it. That trick of imagining it as a future item may bring those more to the forefront and get you to research them more.
Yeah, and it's kind of that, if I only knew now what I knew then,
Yeah,
or the reverse of that, can be a pretty powerful thing. All right, so let's go ahead and close down with this one again, just underscoring, again, we think that the roundtable is a living demonstration of a club or a pod, and pretty good track record over 13 years, coming in around 15% versus a market at approximately 10. And again, I just leave us at this point because I found Tillinghast's comment about how often you need to be right or beat the market to really do well in investing, and that 55% number again stacks up pretty favorably against that number. And we've actually used 60. We'll be switching to 55 because between Tillinghast and then you talk about verifying with evidence. If you take a look at the Motley Fool's caps endeavor that they do, with stock picking endeavor, their number is right around 55% too. I mean, there are exceptions, obviously. Some people at 30, some people at 70, but 55% is a fairly common number. And Tillinghast lays it out for us. Ken, did you want to add anything to that, or are you good to go?
Well, I've been thinking, Mark, that one of the things that is lacking in some of the discipline we use for investing clubs is a slide just like this one, or the ability to create a slide just like this one. My first question when I visit an investment club is, how are you all doing? And what I mean is, how is your portfolio performing really? And I uniformly get an answer that says we're doing great. And then I follow up with, and how do you measure that? And I'm met most of the time with blank stares, or I'm given ideas that I know from an accounting standpoint or from an arithmetic standpoint, let alone putting it into the accounting world, just don't measure what people think it measures. I've had people tell me that the unit value of the club and where it stands tells you all you need to know about the performance of the club. And I'll admit it tells you a lot, but it doesn't tell you anything about the performance, and it especially doesn't tell you anything about current performance versus long time performance if it's an older club. I'm just wondering if bringing in ideas like this one to what we're talking about, and I'm giving a very specific example. There's all kinds of other examples we could talk about. If that's not part of the process as well, that means looking for ways to validate what you're doing, looking for ways to measure what you're doing, and accepting the answers if they're not something that sound like you're doing as well as you thought you were doing. I really think those are all important things for
Yeah.
people to keep in mind. You could have the best run organization in the world, but if it's performing in a negative fashion, no matter how happy everybody is, maybe it needs some tinkering with so it can move into the happy zone versus the unhappy zone.
Yeah,
That's enough rumination there.
I was part of an investment club that was awfully fixated on the total balance, total assets. And I pointed out one time when one of the charter members made a substantially large withdrawal, you know, basically taking away almost 20% of the club. That balance, you got to have a different way to measure at that point for sure. And the other thing I was going to mention, Matt, is the Mutual Club of Detroit actually had a ratcheting switchover process for who was the stock watcher. And they literally would rotate the club roster and the holdings, and it was a continuous rotation so that you didn't get stuck with one stock over the long term.
Yeah, I think that's an interesting process that I don't see very often.
Mm-hmm. And it was interesting to me. So we'll come back to a little bit more with Tillinghast next week and continue this. Again, we'll sign off for today with the reminder that we do put these sessions on YouTube. You can see last week's session is right there. And this session here is one that I have recommended to people who are not familiar with the organization, including that group of people from Comerica, because there are some moments in there that just frankly can knock the socks off of somebody who's curious and seeking a path to potentially better investing. And with that, we're going to leave with, I think we actually dissed Winston last week when we were talking about the cover slide. Just wanted to point out
best
that
in show, isn't he?
He was best in show at Westminster, so he can smoke whatever he wants and drink whatever he wants at the poker table. And he looks like a fun dog to be involved with. So with that, I think we can sign off. We'll come back and do part 3 next week. Thank you so much, Matt, for the continuation and your patience.
Very welcome. It's always fun.
And any other things we need to cover before we?
Well, Mark, we have a shameless plug from Stefan Emmerich from the Heart of Illinois chapters. He said if you like the bull sessions on Tuesday afternoons, you might want to go to the Wednesday morning breakfast club, 8 a.m. Central every Wednesday, and you get more information by going to the Heart of Illinois webpage on the Better Investing webpage. So that's called the Wednesday Morning Breakfast Club, 8 a.m. Central Time. I know where I am at 8 a.m. Every morning.
Well, that's central. You get a whole extra hour.
You reach a certain age, you don't have to be up at 6.
It's 9 o'clock Eastern Time. I know you're up by then.
I know where I am at 9 o'clock a lot of mornings, Mark.
All right. I'm going to take Steve up on that. Steve is a longtime member of the Heart of Illinois Club, very familiar with the Beardstown Ladies. And Steve has been directly involved in teaching and nurturing some investment clubs for decades in central Illinois. And some of them are quite effective and prosperous and rewarding.
Steve.
So thank you, Steve.
Steve, I'm going to ask you a question that maybe you can answer in the text then. Will they find a registration link on the webpage, the Heart of Illinois webpage, on the Better Investing site? Will they find a link there? And if not, maybe you could send Mark and myself a link, and we'll do some promotion of it for you. It's the same link each time, Mark, and it is on the Heart of Illinois part of the Better Investing webpage. When you go to the front of the Better Investing webpage, look for chapters in the upper right-hand corner, hit chapters, and then if it's not your chapter, hit other chapters and look for Heart of Illinois in the Illinois chapter.
Good stuff.
Okay.
Thank you, gentlemen. And I still have to send my money to the federal government. So they've been done. For those of you who are worried, they've been done for several weeks. I just don't send because I owe them a tiny bit of money, and I don't send till the last day.
Hey, now that interest you get for those extra weeks is worth something.
Oh yeah, there
Yeah,
you go. The float.
that
Float.
used to be the strategy. It wasn't the strategy for a long time, was it?
Until
Well,
Hit
with
some
all that
balls
in
and got
mind,
more.
I'm going to wish everybody a good afternoon, and we'll see you next week. Mark, Matt, thanks for the intellectual exercise, and I'm going to beg off. Bye,
Yeah.
everybody.
Thanks, everybody. See you next time.
Bye, everyone.